we're on to yet another exciting one in Tesla. Tesla stock reporting earnings. We're going to be looking at that. Stock's down 5%. We're going to take a look and see what the reasoning is behind this. See if there's something to, maybe cause this 5% dip, or if it's just part of the broad market sell-off. Again, we'll see. It could be anything. Again, we saw it with Facebook doing really good numbers, yet still seeing a sell-off. So you never know. And again, it's going to be a very choppy day. I'll just tell you that right now. Very choppy after hours for Tesla. So who's to say where it's at right now is where it's going to open tomorrow? It's really probably not going to be that way. Obviously, for reference, I always do this. Just look at the 1-year chart on this thing. The thing is up 660% in the last year. You need to consider that when you're talking about this stock. So let's take a look at these numbers. So Tesla puts a Q4 non-GAAP EPS line of 80 cents, misses by 25 cents, and a GAAP EPS line of 24 cents, which is a miss by 54 cents. It's obviously a really big miss in terms of EPS line. You can't deny it. But there is a positive thing that you need to mention here, is that the company is stuck to the profitability goals they've given. They told you they'd be profitable for the full year. Even through pandemic, you know what? They've been managing to do it. So you need to give them props for that. Even though obviously it's a big miss, they've been able to, which profit's been a goal they've been chasing for a while. They finally stuck to it. 3 consecutive quarters of profit is pretty exciting for this company. So there's definitely positives there. The revenue line, not bad at all. $10.74 billion, up 45% year over year. Beats by $280 million. Actually, it's a really good revenue line. I can't lie to you. Pretty good beat as well. Up 45% growth year over year obviously is no joke, especially at $10 billion. That's quite a bit of revenue growth. I mean, that's exciting stuff for Tesla and what they're able to do. Automotive margin set at 24.1 versus the 27.2 consensus. Obviously a little bit lower than Q3 in the consensus, so you need to consider that. That's a negative thing to look at as well, but we'll see. Tesla reports that it produced 179,757 vehicles in Q4, which is up 71% year over year. And they delivered 180,667, which is up 61% year over year. 6th quarter in a row of being profitable through volume growth and regulatory credit revenue growth. Good for them. Obviously, gross margin, not the most exciting thing. The Gigafactory in Shanghai has the ability to sustain a run rate of around 250,000 Model 3s a year. That could obviously add a lot in terms of production for them, and sales could be a big deal. And they expect to achieve 50% average annual growth in vehicle deliveries over a multi-year horizon, which is honestly that's an extremely strong forecast for them. And it's a bold statement. So you'd be shocked with guidance like that to see the stock go down. You would. But again, you need to put into perspective the value in which the stock has right now and how much it has skyrocketed over the last year, really over the last 2 years, how much the stock has done. So you need to consider that. Again, 52-week trading range of $72 to $891 right now. I mean, it's crazy what's going on here. So you see real quick just off the delivery numbers, obviously Model 3 being the flagship vehicle right now. They delivered 161,000 Model 3s. Model S, they delivered 18,900. As far as production for the full year, you saw deliveries of 442,000 Model 3s, and Model S is delivering 57,000 vehicles. And obviously, before we get into a few lines here from the slides, you need to put it into perspective, because I always need to, the fact that this company is the largest in terms of market cap of any automobile company out there. And there are companies that produce 500 or that sell 500,000 vehicles in a quarter. They did it in a full year. So you have to put it all into perspective when you're thinking about this. Again, the growth rate's fantastic, but this company's valued more than every single automaker combined. I know it's hard to believe, but it is. So you need to put that into consideration, where the vehicle numbers there probably outweigh this thing. If you combine them all, probably 30 to 1, I could probably imagine. Probably way higher than that. It's probably closer to like freaking 200 to 1 in terms of deliveries compared to what Tesla's able to do. But again, it's all about the future, and that's the thing that investors are hedging on, and that's why you see this movement. Again, there's a couple things I wanted to show in terms of these slides. You see, obviously, the vehicle delivery, how it's been a pretty consistent uptrend. Pretty exciting to see that. This is obviously a really good quarter for them, so they have that to boost their spirits. Operating cash flow and free cash flow, you've seen positivity again. Really good stuff to see. They didn't do it the full year. Again, quarter one was a little bit rougher for them than they expected, which is not crazy to see. It was a pandemic quarter, start of the pandemic. Things got out of hand. But from there, 3 consecutive quarters of good continuous growth. And from a net income line, really nice to see. From a net income perspective, they did, in fact, even on a GAAP standpoint, have a consistent full year of profit, which is something that they've never done in the history of this company. So it's been really, really exciting for them, and they've been able to really turn a new leaf in terms of that. So trailing 12-month, obviously you see vehicle deliveries. It's an even better picture of this chart, as well as its operating and free cash flow. From a trailing 12-month standpoint, you see where the growth lies in this net income line. You see where this company's headed, and that's why this valuation exists to where it does, because investors are seeing the future and what this company will become. So you need to mention that. Obviously, it's worth thinking about. And from a balance sheet perspective, I'm pretty impressed with what they've been able to flip around with this thing. I'll be comparing the far left line and the far right line. It's a year-over-year comparison. Total assets, when you're talking about December of last year, we're sitting at December of 2019, I should say. We're sitting at 34.3 billion. Now sitting at 52.1 billion. Quite a big difference there. And from a liabilities standpoint, total liabilities, a line I can't highlight, but it was last year sitting at 26 billion, 26.2. Right now sitting at 28.4 billion. That leads to an overall stockholder equity right now. Stockholder equity a year ago was 6.6 billion. Right now sitting at 22.2 billion. That's a massive flip in terms of this balance sheet, and that's kind of what is exciting about this stock. There's a very positive thing to notice. This used to not be that exciting of a balance sheet. I can't lie to you. It used to not be a super, super exciting balance sheet. They've managed to turn that around in a matter of what I would say is probably 1.5 years. They've been able to turn this balance sheet into something that's really something to look at. So really impressive numbers here, and they've stuck to what they've promised investors. So I think that's part of why the stock's gone up quite a bit. I still don't see myself buying this company. I mean, I get it. It's really exciting, really cool, right? But the valuation, just for me, it's absurd. The P/E ratio over 1,700, market cap of 820 billion. When we're talking about an annualized revenue of not even 40 billion, I just can't justify it. I can't. I'd love to, but I just can't justify the valuation at this point. Like, I think there's much better buys out there right now. Not saying Tesla stock's going to necessarily tank or anything. I just think I think there's a lot better value buys in the long run when more companies start getting into the electric vehicle game. I know that Tesla is the number one, and I'm not going to deny that, but I just don't think they'll be able to keep the valuation that they do when other people start getting into their territory. So that's my opinion on the matter. I hope you enjoyed. Let me know your opinions. Have a good one.